I'm swinging at easy pitches in business, but they have to swing at bad pitches. But I tell them I want them to try and do it. And if they fail, it doesn't bother me at all. I tell them if they give $1 million here and $1 million there and $1 million there, they're not going to sleep because I'm going to be haunting them. I'm going to come back every night. I do not want the eyedropper approach used to philanthropy. But I want them to use their judgment to look at important problems that do not have a natural funding constituency. If the government's going to fund it, fine. I mean, they should be funding important problems, but we won't need to do it. The role of private philanthropy, in my opinion, is to fund things that don't have the natural constituency, and that's what Bill's doing. There aren't a bunch of people around that you can make an emotional appeal to make vaccines available to millions and millions of kids around the world. It doesn't tug at anybody's heartstrings. You can't name buildings after them. I mean, it just isn't the sort of thing that you can raise money for on an emotional basis. And there's nothing wrong with raising money on an emotional basis. But that is a problem that won't get solved by a funding constituent that's responding to that. But Bill is responding to what in his mind is the important thing, which is saving lives, and he doesn't care whether he gets his name on a building or whether anything happens or whether anybody knows about it. I mean, he gets publicity just because of the scale he's on, but he doesn't care about that. I can promise you that. So that's my philosophy, is that I got this money not because I'm a superior human being, not because I've done more for society than other people. I was wired the right way to be dropped into the United States at this particular time. I mean, it's a huge capitalistic society, and I'm wired, no credit to me, but I was born that way, so that I'm better at asset allocation than other people to some degree. Just like other people are better at all kinds of other things. And I was with two teachers out at Sun Valley that are doing more for society than I am, and this market system does nothing for them. Market system does all kinds of things for me. Gates says if I'd been born 5,000 years ago, I'd have been some animal's lunch, because I can't run very fast, and I can't climb trees. I mean, and I could tell that animal was chasing me, wait till you see how I could allocate assets, But it wouldn't have made any difference. So here I am, I'm born now, just very, very lucky. And the odds when I was born in 1930, the odds were 50 to 1 against me being born in the United States. That's a terrible set of odds to face. And yet I was dropped down here, And if I'd been dropped down in Peru or someplace or China, I mean, I wouldn't have had a chance. So society is what does it for you. And it should go back, in my view, it should go back to society. If you've been lucky enough to be dropped into a society where your particular wiring pays off big, that's just luck. And there's nothing wrong with being lucky. I don't feel guilty about it or anything else, but I also don't feel that, I feel I have a lot of fun doing what I do, but I feel the money should go back into society, and it should go back as intelligently as it can. And the best way to do it intelligently is to have high-grade and intelligent people administering it at the time. And you don't know the problems that are going to be out there 10 years from now or 20 years from now or 30 years from now. But I do know if I've got a small number of high-grade, smart people, and high-grade is more important. If you gave me 20 extra points of IQ, but cheated a little on the high grade, I wouldn't take it, because they got to be. There's so many chances to do things in a petty way, or to try to. I mean, people get subverted in their own minds to their own interests rather than the interests of the institution. So I really want super high-grade people doing it, and I've got them. And I think the money might do a lot of good, it may do no good, but it'll be operating in fields where if it does some good, that good probably wouldn't have been done otherwise. Yep.
I was just wondering, there's a lot of differences between the recent boom and bust in the stock market and the one in the 1920s. But there's also a lot of similarities, and those similarities are allowing people to draw the conclusion that stock prices will be depressed for some time to come. Where do you disagree and agree with that conclusion?
Well, the whole century is quite interesting. If you take the 20th century, it was an unbelievable century for the United States. The GDP per capita, and that's the way to think of it, as per capita. Sometimes they talk about our GDP versus Europe's, but if their population's the same every year and ours goes up 1%, you've got to, in the end, you got to have a divisor as well as a numerator. And So GDP per capita in the 20th century in the United States went up 610%. Actually, qualitatively, it went up far more than that because you can't really measure, certain things in medicine or whatever it may be and improvements. But just on a quantitative basis, it went up every single decade, including the decade of the 30s. So here you had 100 years when basically the U.S. citizenry was improving their lot decade by decade by decade. The 30s, it was up 13%. Best decade was World War II. The 40s, it's up 36%. The worst decade was the First World War. So you get sometimes the analogy, you can get in trouble on analogies. But in any event, it was a huge period. Interestingly enough, there were 6 big periods in there for the stock market in both directions. There were 3 big bull markets. From 1900 to 1921, the Dow went from 66 to 71, less than a 10% move in 20 years, less than 0.5% a year. You got dividends too, but 0.5%. So it didn't move. From 21 to 29, as you point out, it went from 71 to a high of 381 in September of 1929. Went up 500%. Well, obviously, the well-being of the country didn't go up 500% during that period, and the well-being of the country went up a whole lot more than 10% during that first 21 years. So you got this very uneven development. Then from September of 1929 until the end of 1948, the Dow went from 381 to about 180. It was cut in half. And that was 18 long years. And yet the per capita GDP was moving right up during this whole period. So the economy was doing fine. From 48 to 65, the Dow went again from about 180 up to close to 1,000. Again, 5 for 1, which was far outstripping it. From 65 to 81, the Dow went down, literally. Well, again, per capita GDP. And then we've had this last period where it's gone up terrifically. If you take the whole 100 years, it went up 180 for 1. Every $1,000 became 180,000. But 43 and 3/4 years were those 3 big, huge bull markets, and 56 and 1/4 years were periods of stagnation, all in an economy that was doing fine, year after year after year. 56 and 1/4 years, net, the Dow was down a couple hundred points during that period, and the other 43 and 3/4 years made up the rest of this move from 66 to 11,000 some on the Dow. So you say to yourself, how could it be that you could have a country that was doing better and better and better and better? Citizens were living, every generation was living better than the one that preceded it. But you had these huge changes. Big gains a few times, long periods of stagnation. 20 years, I mean, that's a long time to do nothing. The answer is that investors behave in very human ways, which is they get very excited during bull markets and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, or the neighbor says, I wasn't in last year when that neighbor was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say, this is a lousy place to be. So they don't care what's going on in the underlying business. And it's astounding, but that makes for huge opportunity, just huge opportunity. I mean, I've lived through roughly half, in an investing sense, about half that period. And I've had that long period of stagnation from 65 to 82, 17 years. I wrote an article for Forbes in 1979. I just said, how can this be? Pension funds in 1970 put 100 and some % of their new money in stock because they were wild about stocks. Then they got a lot cheaper and they put a record low in, 9% of their net new money in 1978 when stocks were way cheaper. People behave very peculiarly in terms of the reactions because they're human beings and they get excited when others get excited, they get greedy when others get greedy, they get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime and securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich. And you won't have to be very bright. I mean, I'm sure you are, but you want, you know, it doesn't take brains. It takes temperament. It takes the ability to sit there and look at something. When I started out in 1950, I would go through and find things at 2 times earnings, and they were perfectly decent businesses, and people wanted jobs at those companies, and everybody knew they were going to be around, and they wouldn't buy them at 2 times earnings, and that's when interest rates were 2.5%. You know, I started selling securities when I was 21, and a Kansas City life insurance company happened to be a fairly prominent company in Omaha, and the policies they sold you, if you were buying life insurance from them, had a built-in assumption of 2% interest. The stock of Kansas City Life was selling at less than 3 times earnings. You were getting 35% if you bought the stock. No question about the soundness of the company. I went to the local agent. I figured, hell, I ought to be able to sell him a few shares of stock. I mean, the guy ought to understand it. He's got his whole life invested in this company. I went to the local agent who'd been with him for 20 years, and his name was Moose. And I said, Mr. Moose, I said, you know, you're selling these policies with 2%. You may even have a few members of your own family, and you can buy into this company whose paycheck you depend on every month, and whose future your beneficiaries of these life policies depend on, and who you're selling them, you know, a 2% investment on, and you can get 35% on your money. And he said, you know, stocks aren't any good, and I couldn't sell you. You know, I was a lousy salesman. I mean, well, you have to start with that, but it just blew me away. It blew me away. I thought. Sometimes I used to wonder if I was nuts, you know. But those things, the same thing happened. I mean, in 1964, the Dow closed at 864. At the end of 1981, 17 years later, it closed at 865. It moved 1 point in 17 years. Now, that's not a big move. And that, you can't believe how discouraged people were during that period. But, you know, people were living better. So things can go on a long time that don't make sense, but they do come to an end. I mean, the internet thing. I mean, you had these companies selling for many billions of dollars that had practically no prospects of making any money. That's a bubble. But Herb Stein one time said, anything that can't go on forever will end. Now that seems pretty. But think about that, and particularly think about it next time you're inclined to do something just because the stock's gone up a whole lot, you know, and your neighbor's made money or something. You've got to be, you just have to sit and think objectively and think about, would I buy this whole business? If it's an internet company, it's got 100 million shares out and selling at 100, that's $10 billion. Is it worth $10 billion? If it's worth $10 billion, it's got to be able to give you, you know, 700 or 800 million next year. And if it doesn't give you 700 or 800 million next year, it has to give you maybe 10% more than that the year after and continue to. There aren't a lot of businesses that can do that. And people just go crazy. And of course, it's fun. I mean, it's like that sign they put in brokerage offices that says, avoid hangovers, stay drunk. You know, I mean, it's just so much fun to keep playing. But you got to do sensible things to get good results. Yeah. Next. Well, we got 3 people standing there, so let's do the 3 that are standing there. Okay.
Good morning, sir.
Hi.
Hi. I was wondering what your opinion is of the Federal Reserve and their actions taken recently. Do you feel they've done enough to boost the economy? Yeah, well, I'm a fan of Alan Greenspan's over time. I've known him for a long, long time. We were on a board together at Cap Cities, and Alan is a very, very smart guy. He is motivated, in my opinion, entirely by what is good for the United States, the people of the United States. And so you couldn't have a better person in there. And the problem he may have is that because his tenure in office has been associated with this incredible bull market, that even though he wouldn't have claimed credit for it, that people might associate it because of the importance of the Fed generally. They might associate with him, so they may, if things don't work out so well, they may blame him as well. But I think his policy has generally been very good. You have to understand one thing about the Fed is that it's not as powerful as the mystique would make it. Its brake is better than its gas pedal. When the Fed wants to put on the brakes, we go through the windshield. I mean, you know, the economy just, they can put on the brakes. Paul Volcker did it. He broke inflation by doing it. But I mean, when he put on the brakes in that
period around 1980. I mean, people hated him. He was crucified for it, but it was the right thing to do. And he could do it. He did it all by himself. And and it was the only way, because of the momentum that inflation was generating. It was the only thing it was what was needed then. Enormously unpopular. It's much harder for a Greenspan to put on the brakes, because nobody wants him to put on the brakes, plus he's so visible. But he's put them on sort of gradually. But stepping on the gas pedal, he does not necessarily get the same result. It may help, but there are 1,000 other variables operating. And as you see in Japan, you can get down to 0 interest rates, and you can't stimulate anything. So it isn't like the Japanese haven't read the same books we've read about economics. I mean, they've read Keynes and they've read the whole thing. So we're not smarter than they are. We don't have any secrets they don't have, but they don't know how to get their economy going. And their GDP there has been gone no place, in the last 5 years, and there's still problems around. So easy money doesn't solve everything, but Greenspan could very well get blamed for the fact that he hasn't solved everything, and it's just not in his power to solve it. He can help in various ways, but I don't think you could have anybody better, and I think he's done the right thing to this point, but the right thing may not be quite as effective as people may hope that it would be. In economics, you always want to ask, and then what? You'll read in the paper, well, what happens if the Japanese start selling our government bonds, or what happens if they dump the dollar? They can't dump the dollar. There's no way to dump dollars. You can, or at least dollar assets, because if the Japanese want to sell our government bonds, if they sell them to us, they get a time deposit or a demand deposit at Citi, or they still own a dollar asset. If they sell them to the French, they may get some assets from the French, but now the French have it. I mean, the only way you can reduce foreign investment in the United States is to change it around so they're consuming from us more than we're consuming from them. I mean, when we buy a television set from Japan, if we buy more television sets from them than they buy equivalent consumables from us, the exchange, what balances things is we give them some investment type asset, whether it's cash or a U.S. government bond or our stocks or our movie studios or our real estate or different things. And the only way that reverses is when we start running a trade surplus, which we're miles away from. So logically, if you read classic economics, you would believe that our currency would have been weaker over the recent years, and that it would be weak now. But there are other things operating, and that's one of the problems about economics, is there's never just one variable. There's usually hundreds of variables, and they operate with different impact at different times. I mean, it's not like a physics formula. I mean, I guess it would be if you got into the Heisenberg principle or something like that. But the formula has a lot of the same variables year after year, but the relative importance of those variables and how they interact with each other is never exactly the same, and that's what we find out, the Japanese find out, everybody finds out. And foreign currency, or the value of our dollar and currency rates, are defying what you would expect based on history. But as somebody said, if history were a perfect guide, the Forbes 400 would all be librarians. They just go and look it up in the books, and they'd always know all the answers. But history doesn't repeat itself, as Mark Twain said. History doesn't repeat itself, but it rhymes. I mean, things come back, but they don't quite come back in the same form. And we'll understand all this perfectly in a few more years, why the dollar's behaved the way it has. But I think it would be useful net for the U.S. if the dollar were less strong.
Yes, Mr. Buffett, thanks for taking my question. My question pertains to small business, and my family's been in the truckload sector of transportation for about 50 years. And as you talked about the airline industry and all the mergers and acquisitions and things going on, and a lot of the smaller players being tossed out of the market, what do you see for people that, like in this room, for students that want to start a small business, and maybe they want to start in a business that is somewhat of a commodity type business, but as businesses, the large corporations get larger and their efficiencies increase, how can a small business compete with these people?
Yeah, In many areas, small businesses have an advantage. In other businesses, scale has a huge advantage. And I mean, you don't want to be a tiny carbon steel producer. On the other hand, when mini mills came along and learned how to use scrap more effectively than the older methods of making steel, they actually had an advantage. So scale is a huge advantage in some businesses. It's, the largest airlines haven't won. Southwest Airlines has won, starting with, just a few planes flying down there between Houston and Dallas. And they have become bigger, but their ambition hasn't been to be the biggest. And, they probably buy their fuel just as cheap as United, and they probably bought it, when they're a lot smaller. Walmart is a classic example. I mean, who would have thought 25 years ago, 30 years ago, I mean, here was Sears with a 100-story plus building in Chicago, had access to money far cheaper than Sam Walton. I mean, Sam Walton's credit was not as good as Sears. Every supplier wanted to do business with Sears. Nobody had ever heard of Sam. Every real estate developer who was developing a new shopping center went first to Sears, and Sam got the short end. So here's a guy starting in Bentonville, Arkansas, and he kills them over time. Just plain kills them. And disadvantage in buying, disadvantage in borrowing, disadvantage in real estate. Advantage, Sam Walton, and his ability to inspire, in the end, hundreds of thousands of people to be enthusiastic about going to work and doing the right things over time. So I would be just as optimistic about small business generally. Now, there's certain areas where scale is just plain important. But I see no disadvantage. We intentionally at Berkshire, we have 112,000 employees, more in Georgia than in any other state in the union, incidentally. We employ a lot up near Dalton, and we employ a lot of people in Macon at Geico. And we intentionally, with our 112,000 employees, we probably have, I don't know how many business units, but lots. And we only have 13.8 people at headquarters. I'm not the 0.8, incidentally. I resent it when people think that. I'm a full, but we have one woman that works 4 days a week. And that's all we have at headquarters, 112,000 people, 105 billion a market cap. But we intentionally keep our units small. We think, we want them to have the nimbleness, the responsiveness to the customer particularly, that will turn them, that essentially will more than offset anything that the scale of having maybe a little more purchasing power or something will develop. We own a home furnishings business in Utah, run by a fellow named Bill Child. He was featured in Fortune about one issue ago. The cover story was God in Business. Bill was the #1 illustration. Bill took that business from his father-in-law when it was doing $250,000 a year, and he now has over half the business in Utah in his field, about close to $400 million. He built it by thinking about the customer. And the truth was, he was competing with Sears, he was competing with Levitt's, was a huge furniture retailer in the past. He was competing with everybody. But all he thought about from the moment he got up in the morning was, how do I take care of my customer? And that wins. We have a business in Omaha, some of you may have heard of. It's the largest home furnishing store in the world. In Omaha, which only has a SMSA of 650,000 people. It's on 72 acres. It does $325 million in one location, which happens to be $500 for every man, woman, and child in the SMSA, but it draws from beyond that. That business comes about, or has resulted, from an investment of $500 in 1937 by a woman who walked out of Russia in 1921. She walked out, got on a peanut boat, landed in Seattle with a tag around her neck. She couldn't speak one word of English. The American Red Cross looked at the tag. It said Fort Dodge, Iowa. They got her to Fort Dodge, Iowa. She couldn't pick up the language. She was there 2 years. She said she felt like a dummy. So she came to Omaha because there were other Russian Jews there, and she'd at least have somebody to talk to. Her little girl started school, Frances. Frances would come home at night and teach her mother the words she learned in school that day. That's how this woman, Rose Blumpkin, learned the English language, but from her daughter from kindergarten on, teaching her the words. She brought 7 siblings over from Russia, one at a time, $50 every time she saved $50. She sold used clothing and other works. She got her 7 siblings over, her mother and father, and by 1937, 16 years after she got here, she saved $500. She got on a train, went to Chicago, to the American Furniture Mart, which was this huge, impressive thing. She was smart as hell, but she thought like a peasant in a way. And she saw this building and she decided to name her company the Nebraska Furniture Mart. She went in and bought $500 worth of, she bought about $2,000 worth of merchandise. All the way back to Omaha, she worried because she thought, I owe $1,500. And she only had a $500 equity. So she got to Omaha. She took the bed, the sofa, the refrigerator out of her own home to sell fast so she could get the money so she could pay on time. She took that business and built it from that start. No one would sell to her. She went into court 4 times because they tried to, the carpet manufacturers tried to keep her from selling at a discount, and she went into court and told the judge, because she figured out ways to buy this stuff in various nefarious ways from had other people buy it for her, and she said, look, I pay $3 a yard for this carpet. Brandeis sells it for $6.98. She says, I sell it for $3.98. Just tell me, Judge, how much you want me to rob people. She defended herself. Papers wrote it up. The judge bought carpet from her the next day. I mean, it was marvelous. Brandeis isn't selling anymore. They were the huge department store in Omaha. She put everybody out of business. And the punchline, she worked till she was 103. She sold me the business when she was 89. And she didn't have an audit. I went out to see her one afternoon. I took a check out with me and because I knew she wanted to do something. And I said, Mrs. B, here's the money. I said, I don't need an audit. Just tell me whether you owe any money. She said, I've never owed any money since I owed those guys back in 1937. And she said, it's all free and clear. She'd never seen a balance sheet. She didn't know what accounting terms meant, but she understood the nature of the business. And I told her, I said, I'd rather have your word, you know, than an audit from every one of the big 6 or big 8 or whatever there were, the number at the time of the top auditing firms. And she worked till she was 103. She died at 104. She had 3 siblings at her funeral. I mean, those are some genes. Her son works there now. He's 82 or 3, and the 3 sisters are all alive. But the punchline is, she couldn't read or write. This woman could not read or write. If you told her this room was 68 feet by 43, she would tell you how many square yards it was like that. She never went to school a day in her life. She would tell you how much that was at $5.98 a yard. She'd add the tax. She'd knock off something because she liked your looks. And that would be it. And that's, you know, that is that, you can't beat that, you know. And you can't replicate that at General Motors. You can't institutionalize that. The person who brings that kind of drive to a business and does it day after day and thinks about their customer, and that's all she did. Well, she raised 4 kids in the process too, but you can't, it can't miss. And no, you don't have to worry if you're an entrepreneur. In most fields, there's some fields where you can't do it because there are scale aspects to it. But in most fields, you know, you'll kill people. Bob Shaw did that with Shaw. Nobody ever heard of Shaw in carpet 30 years ago, and he's got 40% of the carpet business in the country. So it's a great field of opportunity out there, and I don't know about trucking specifically, but I wish you the best on it. And you won't be at a disadvantage in many fields if you're small, and you'll actually have an advantage. George, thank you.
Mr. Buffett, thank you very much for sharing your wisdom and your ideas and your wonderful stories with us today. We are truly honored and pleased that we've had this opportunity to get to know you a little bit better. I'd like to thank a couple people before we conclude for helping with the logistics. Associate Dean Bob Gatewood, our Director of Alumni Relations, Marie Garrison. Thank both of you. David Dodson, our Director of Communications. There's a lot of work and effort went into this, and I thank all of you for all that you've done. And Earl, again, thank you for helping make this possible. Mr. Buffett, we have a parting gift for you, but it needs to be placed into context before we show you what it is. In your most recent newsletter to your annual report to the shareholders, you discussed some of the things that you look for in making acquisitions, and one of the things you talked about was owners. You look for owners who care who they sell to, and that was important to you. I'd like to quote from your report. When a business masterpiece has been created by a lifetime or several lifetimes of unstinting care and exceptional talent, it should be important to the owner what corporation is entrusted to carry on its history. A little bit further down you say, how much better it is for the painter of a business Rembrandt to personally select its permanent home than to have a trust officer or uninterested heirs auction it off. Well, we believe that many of these words apply to you as well. You too have created a business masterpiece. You too have created a Rembrandt. What we have today is a lighthearted portrait, a lighthearted characterization that we hope captures some of the business milestones in your career, and we hope also captures some of that quick-witted humor that you demonstrated today. It was painted by a good friend of ours and a well-known artist, lives here locally, Alan Campbell. Alan is with us, and he will help unveil it today. Alan, please come down. Now, when he unveils this, please understand that you're not going to be able to see the detail of this from where you're sitting, but we would invite you to come down and walk past it as you leave today. Alan, if you're going to speak, come over to the microphone, please.
Well, thank you, and Mr. Buffett, I hope you'll maintain your sense of humor, which appealed to me greatly when reading your corporate report, and this is going to be a test of that famous humor. But it's intended to be a portrait both of you and of your company and of your values. And when Marie Garrison, my girlfriend, the alumni director here, told me you were coming, and I read the comments about the Rembrandts and lying on your back and feeling like you could lie on your back and paint the ceiling every day at Berkshire, you basically opened the door with your own words. So, and just on an aside, my brother's one of your pilots for Executive Jet. So. The one thing that's not included is a reference to the jewelry company, so you've been spared jewelry. This is based on a very famous Rembrandt self-portrait, if anybody's information.
Mr. Buffett will sign autographs. If you've got books with you you'd like him to sign, we'll set up a table down front here as for the next 15 or 20 minutes. If you'd like to take a picture, if you've got a camera with you, please come on up. Don't hesitate. And thank you all for coming and participating today. It was a wonderful event. Thank you very much.
Xin cảm ơn các bạn đã xem video này. Hãy like, share và subscribe kênh để các bạn có thể nhận được nhiều hơn những cái video giá trị hơn. Xin cảm ơn và hẹn gặp lại. Thank you very much for watching this video. Please like, share and subscribe this channel by button below. Thank you very much for watching. Peace.